Hello everybody. So a quick video today to tell you that Sailor did it. He made stretch work finally. It took over 2 months, but it is beautiful, and he literally succeeded at creating the TradFi stablecoin. Granted, it's $100 stablecoin and not a single dollar stablecoin, but he did it, described it as MSTR's killer app, right? That was what he described in the Q3 call. Fong Li described it the same thing, thinking they thought it would be faster for the market to realize how good of a product this is. But they're used to it taking it longer than they thought, but they did it. And so how does this work? Well, look at it. This is the trading day today. And keep in mind, much of the trading day yesterday was also like that, especially towards the final hours of trading. So we're almost at a day and a half of this going on now. So you have stretch. This is the stretch preferred. Whenever it breaks 100 by even a penny, EATMs. He never lets it go much past 100, right? He just ATMs whenever it gets to 100 past a penny. And so the market, as the demand wants to push this thing more expensive than $100, it doesn't let it happen by overflowing the market and by ATMing on the stretch preferred. So whenever a stretch breaks by a few penny, he ATMs away and brings it back down. And how did that work? How was he able to create this high demand for stretch? Well, it's simple. He announced last Thursday, he announced they were increasing again the yield by 25 basis points, by 0.25%. Yeah, give it 2 days. 2 days, that was enough for people to want to take that thing above $99. And so as rate cuts arrive again in December, for example, he will likely drop the yield because he won't be able to hold the price down. And as he gave in the guidance before, if the price were to break 101, so let's say ATMs away, and it still trades above 101, then he would drop the yield to bring it back towards the $100 price, plus or minus a few pennies. That is really the strategy. That is a genius strategy. You are optimizing for the price of the asset, and you are not optimizing for the return of the asset. It's the yield that you swap and you change month to month. To me, fascinating instrument. And why did he create that instrument, right? Why do I call it the TradFi stablecoin or the Bitcoin-backed stablecoin? It's the big $100 bill stablecoin. Well, I call it that because if you look at the strategy, it is one of draining the market, draining the bond market with Strike, Strife, Stride, and stretch a little bit as well, but STRE would be a better fit here. So let's even put STRE here. STRE, the new ETF, is trying to drain the bond market by issuing these instruments that trade at different stock prices. These preferreds have different prices, and then he's draining the currency market. He's draining the currency market with stretch by an instrument that is stable. Currency is stable, so stretch is going after money market accounts, and there's $130 trillion to drain from money market accounts. There's $315 trillion to drain from the bond market and the equity. He drains the equity market by issuing MSTR tokens, and it looks like the MSTR issuance going forward is mostly going to be issuance in order to just pay the dividend and make sure you keep those return of capital, those ROC dividends. Another way to look about it is the story of a siphon. So you siphon capital, the water is the capital that flows to Bitcoin. So capital goes and grows Bitcoin, and he's now siphoning, of course, the bond market. That has been the story of the past year. The currency market, that has been the story since he launched Stretch, and the equity market, that has been the story for now many years. He's draining the capital, taking that capital and making it flow into Bitcoin, and of course, it is just a one-way trip because Saylor is managing the business to never have to sell. That's why he always emphasizes BTC rating and how over-collateralized all of these instruments are. And in the case of Stretch, for example, it's 5.8 times over-collateralized, so it's more collateral than, say, the Treasury that backs even the A-rated bonds. And so that's a big deal. And of course, the demand has been very high for Stretch. Stretch is still to this day the biggest IPO of the year. I mean, we'll see. I guess when OpenAI launches, it won't be anymore, but it's still the biggest IPO of the year. And my guess is that I'm very happy. My guess is that he's ATMing a lot, and I can't wait to see on Monday what's going to happen. How much will he have ATM'd on Stretch on Monday? That's going to be pretty amazing. Lastly, Bitcoin is rebounding. Seems like now that the election is over, it seems like some people in Congress sent a letter to meet with Trump in order to end the shutdown or whatever. So I don't really know how. I don't really know. I don't really know at this point. But the market is taking the news of the day pretty well, rebounding on Bitcoin more than 4.5% actually rebounding compared to overnight yesterday. So up 4.5%. The IBIT, so same trading hours as strategy. IBIT is rebounding 3.5%, when strategy is only rebounding a little less than 2%. So MNAV is compressing a little bit today, but over the long run it's normal because remember, yesterday strategy did not drop nearly as much as it should have, and so today it's not going up as much as it should because yesterday it didn't drop as much as it should have. Essentially, that's essentially the way I look at this. I'm not worried about this anymore. We don't really care about MNAV anymore if Stretch is activated. If the Stretch ATM is activated, we don't really care about the fundraising through the common equity anymore. So we may be really entering that new era where he's fully raising the money and the funds via the drainage of the bond market and the drainage of the currency market. Anyways, this was not financial advice, not investment advice on this channel ever. This is only entertainment. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.